Hi, this is Sive Morten with the daily update on EURUFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today as usual we will continue to talk about the euro currency, and we will start from the daily time frame. Just to remind you, I want to say that as you remember from our weekly research, we have the strong bearish context on the weekly time frame, and daily trend is bearish and weekly trend is bearish, so we have in general until now the bearish context. Well, our expectation that we have discussed in the weekly thread has been linked to that area, and we said that probably market should hit that confluence resistance and be exceeded due to intraday ABCs, and could reach 143.30, 143.50 area. On the spot market, somewhere around 143.70, I suppose, somewhere right here, okay, because futures quotes a bit lower than the spot one. So, and that retracement has been triggered by first reaching this target, A, B, C top, 618 target. Also, as you remember, that was the weekly pivot support 2 and 786 support from that swing high. And this was the target of this A, B, C, D pattern. Okay, so that was a really strong area of support, and this will be logical to expect some bouncing from that area. So that has happened. Well, our trading plan on Monday was to wait until market will hit that area, reach this confluence resistance and hit the intraday target. You will see the target a bit later on the lower time frames. Well, the second step is to determine will market continue move according to this ABCD and accelerate to the 137 target, or market will change the direction and continue with this butterfly. This left wing, okay, and this right wing is forming the target around 152. That is very important area, because if market is really intends to continue move to the downside, it should not show some very deep retracement to the upside. Okay, it should reach some strong area of resistance and continue move down. If instead market stands in the shifting of the momentum and on the bullish side, okay, then market should negate this strong bear to the downside and move above the 145 area. Well, personally, I will not be very I do not will be worried if market even will hit 144.18, this area of resistance from that swing down, because we should worry about the potential bearish bias only if market will break 145, 145.50 area, because in this case it will negate this ABCD pattern, okay, and it will move above the 618 resistance. That is not very typical for the development of the some bias on the market. So market is, if market is really bearish, it should not show such deep retracement, because now it stands neither at overbought nor oversold, so nothing. Market has now barriers to continue move to the downside. This is just the 618 target. Market should not show very deep retracement when it hit it. Okay, so if market will move above 45, 45.50, then probably we could begin to speak about the potential butterfly and thinking in the way of development of this pattern. But until now, market just reached this area confluence resistance, and we have the bearish context, as we said. So today we will discuss what we could expect and what we should to see and have to keep an eye on to establish short positions. Now, on the 4-hour chart, what we see currently. First of all, that is our target that we have discussed, 143.27. From that A, B, C bottom, market accelerates to the 127 extension, then shows 618 retracement. That is common. We discussed this possibility on the forum yesterday, and accelerates to the 1618. So currently this target is accomplished. But now we do not see any bearish pattern, reversal patterns. And the second moment that is very welcome for us if you are bearish is that market stands above the weekly pivot point. That's 142.57. Well, personally, I would like to pull the trigger on the short side of the market only when market and if market will return back below the weekly confidence resistance. That will tell us that this acceleration was just due to this target, so market has accomplished this target and returns back. And the second moment is that market moves below the weekly pivot point. Only after that, I think we could start to search for some possibilities to enter on the short side of the market. Before that, there's a bit risky because it could turn to this larger, as you can see, ABCD. A, B, C, D. The target 144.16. It makes an agreement with the next area of Fib resistance, with that area. Okay, with the 618. If market even will reach this area, this will not totally erase the bearish bias, because this is just the 618 retracement. That's a bit high, but it's logical. So that's not very problem, because market stands inside of the recent swing. That is not very crucial for the bearish bias. This is in general acceptable. Okay, so that could be the next scenario. That's why before entering on the short side of the market, I prefer to see that first market returns back below the confidence, second market returns back below the weekly pivot point. This would tell me that probably the bearish sentiment has reestablished, and we could search for the possibility to enter on the short side of the market. Don't be aware that this really nice move to the downside before we could pull the trigger. It's about 100 pips, but remember that we expect the ABCD, weekly ABCD, with the target around 137. So 100 pips and you enter on the some retracement is much safer than just jump in the market and catch the move against you. Okay, so that's my current view on the situation. Now let's take a look on the hourly time frame. What do we see here? First, we see that bearish divergence with the MACD indicator, although I do not rely on it very much, but I know, guys, some of you will like this signal. That's why I mark it for you. The second nuance that we could see on the hourly time frame is this ABCD pattern. A, B, C, D. Potential D point stands around 143.57. So why is this important and why I call it as a nuance? First of all, take a look at legs. This leg is much faster than this leg. So that tells us that probably if market even hit this target, it has small chances to continue probably to the 127 or 126 or 1618. Then probably I could tell that the more probable the market will finish right here, and probably this move to the downside could start. Another moment that points on that possibility is this stop grabber pattern. Look at this. This red line is the MACD predictor. You can see that this is the same indicator as the MACD. The crossing of the MACD lines coincides with the crossing of the red line and the price chart. Okay, that's the derivative indicator from the MACD. So that shows us trend. But now see, market open below the red line shows the trend is bearish, and now move above it. So if market will close above it, this will tell us that probably market will take out these highs. Why it called stop grabber? Because after that, market very often take out the previous highs, and by this move, market will accomplish this ABCD pattern. That is a small nuance that will help you to not be confused by the continuation or potential continuation to the upside. So if you will see move just to 143.57, it's in the spot quads. It will be around, I suppose, somewhere around 143.90. Somewhere right here. Don't be confused by that, because this could be just the reaching of this target from this more recent ABCD, and after that market could start move to the downside. That's probable. That could be. Market makers very like to do that around some targets and strong area of resistances. It shows that probably market will continue move to the upside, but then it failed and move to the downside. So that's could be. And based on the current environment, I will not look for any short signals before market will hit that area, or, as I said before, market will continue to the downside and move below the weekly pivot point. So that's my current view on the daily time frame. That being said, as a conclusion, we said that market still has the bearish bias, so we should search for the possibility to enter on the short side of the market. and our trigger points that market could hit this area and then move below the weekly pivot point. After that, we could search for the possibility to enter on the short side of the market. This bearish divergence relatively confirms that possibility. This gives us some more confidence that probably it could happen. Okay. The second moment, if market will move about and hold, then probably market will make this greater ABCD. But even reaching on that area around 144.18 will not totally erase the bearish bias that now stands on the market. Only if market will move above the 145.50, 146, only after that we could return to discussing of the potential butterfly sell on the daily time frame. Well, so good luck to you. Don't be trapped by this some nuances on the hourly time frame. Keep your risk reasonable and keep an eye, close watch on the potential bearish signals and reversal signals in that area.